Hi, I'm Rachel Gerber Kule, founder of Pursuit PR, and this is Pursuit Perspectives, where we interview C-suite executives and media partners to create compelling conversation and position them to shine. Enjoy. We're joined today with Allie Canal, on-air correspondent of Yahoo Finance. We're thrilled to have Allie with us today. We've been partnering with her for many years, so welcome, Allie.
Thank you. I'm so excited to join you guys and chat.
The roles are pretty much reversed because usually you're the one introing and asking questions, so you're in the hot seat today.
Love it. Love to switch up sometimes.
Yeah, we'll go easy on you, and I think you'll be a great example also for a lot of our clients on how to really nail an interview and do a great job as an on-air guest. So it'll be multifaceted purpose here.
Great, I'm excited.
So a little bit about you for everyone listening. Allie began her early career in high school as the TV news anchor at her high school, which I thought was amazing, and then went on to Georgetown, where she graduated with honors, and she studied English literature, business administration, and broadcast journalism, and then landed roles ABC News, People Magazine, and now Yahoo Finance. So you've been extremely busy, and we'd just love to hear what inspired this trajectory for you and where you are today.
Yeah, I've always been interested in reporting, talking to folks. I think that's where the high school experience came into play. And I just loved the idea of television and the production behind it. And so after I graduated college, my first job was at People Magazine. So I worked as a production assistant and booker. And I realized when I was there that we had an LA correspondent who didn't have a go-to producer. And that was my goal. I wanted to sort of rise the ranks and be on the live show production team. They had a morning show at the time called People Now. So I just started producing for him on my own, unprompted. And that quickly, after literally 3 months since I got there, that led to a position on the live show to be a producer. And that's really where I learned of production, the daily grind of the live show. After our live show would wrap, we'd have celebrities and other guests come in throughout the day, and we'd do post tapes with them that would go into the show the next day. So I learned a ton there. I was at People for 2.5 years and then came to Yahoo Finance, which is a very stark contrast. And if you would have told me when I graduated that I would end up as a business journalist, I would have said, absolutely not. No way. I want to talk about the Kardashians. I don't want to talk about the stock market. That's boring. But I couldn't be more grateful that I'm in the position that I'm at today. And it was one of those weird moments where I was looking to make a change, and I just had a good gut feeling about Yahoo and just sort of went with that and figured if I hated, I could always leave. But I ended up really loving it. And when I started there, I was a segment producer, and I noticed that we were talking a lot about the stories that I would cover at People just through the business lens. So if you think about the amount of money that actors are making, sort of the Hollywood story, the streaming side of the business, that's all, very prominent in business news. So I pitched a segment that I dubbed Fame and Fortune, which would basically be the intersection of Hollywood and business. And that turned into a once a week segment. So that's how I got sort of my transition into the reporting side. So I was rising the ranks on the production side. I was a line producer. So I was timing out the show, making sure we were hitting our breaks, doing all the segment producing. And then I would take my headset off, run on set, do my Fame and Fortune segment, run back on. So I was sort of doing double duty for a bit. I was writing a lot as well. So going, again, above and beyond my title and really just trying to create the career that I wanted to have on my own. I think that is so key when you're starting out, is you kind of have to be in control of your own destiny. You can't wait for someone to give you an opportunity. You just have to take it. So eventually that led to a full-time reporter role. And then since then, I've sort of been doing the same thing. I've been fill-in anchoring a lot. I fill in on our podcast. Just continuing to learn and to grow has been especially key for me. And that's where I am at today. And I couldn't be more grateful to be in this position and to be, supported by a brand and a company that really is down for you to explore and do whatever you want. I mean, no one's going to hand you anything, but if you're willing to put in the hard work and the effort, you can sort of make a lot of these pivots. So I went from, producing to reporting on just media and entertainment to now reporting on the overall stock market and the economy. And that's definitely made me a more well-rounded reporter and journalist overall, just to have all that different experience under my belt.
Yeah, I mean, you brought up so many good points. I think one of them is especially going from looking more at the people side, at people and the actual celebrity side of things. But in the business world, the CEOs, the executives, they're people too.
Right.
And they're extremely compelling
Yes.
and they have a story to tell about their business and, their own
Mhm.
perspectives that they're bringing to bear. So is there anything there that's been maybe more interesting to you recently, people that you've been interviewing or stories you've heard over the years from a business,
Yeah.
CEO standpoint?
Well, I think what I love about business news is it really is a narrative. You are consistently building on the same story. If you think about something like earnings reports, right? They're released 4 times a year, once a quarter, but they build on the previous year, the previous quarter. There's a natural story and evolution within that, which I find so interesting. And what I love doing at Yahoo Finance is we have a big focus on Wall Street and Main Street. So I love writing the stories that can appeal to the everyday investor, or maybe even perhaps the folks that aren't invested at all and are just starting their journey. So I think right now, a big story is obviously Trump's trade policy, the tariff impact, how that will affect inflation. We just had the Federal Reserve decision yesterday. We heard Jerome Powell talk a lot about this transitory effect of inflation, which I think surprised a lot of folks. And if it is transitory, great. That means we're going to pass through and that inflation won't be persistent. But there's a lot of people on Wall Street that are saying, wait up a minute, I don't think it's transitory. I think we're going to have sticky inflation for some time. And then what's the ripple effect from there? If you have sticky inflation, how does that impact the purchasing power of the consumer? How does that feed into the growth narrative, GDP? Does that lead to a spiral of unemployment when, we right now have a strong labor market? So what is the ripple effect? What is the narrative? What is the story from there? I find just really compelling. So, and I think CEOs, they deal with that as well. Like, their stock price, their companies. I mean, they have regular folk that are working under them that are listening to these earnings calls and thinking, okay, what does this say about the business that I'm working for? And I've been hearing a lot of commentary on earnings calls about tariffs, about uncertainties, really the things everyday Americans are thinking about, I think CEOs are thinking about as well. So it's this interconnectedness that I find really interesting. And in my reporting, I always try and bridge that gap. And I always try and write in a way that the CEOs will understand, but also just the everyday average American will understand as well.
Yeah, and I think that's really important. And in our work on the other side, with the CEOs working on earnings reports or working on board meetings, it's always thinking about who your audience is and what is it. You have so much information to share, and you have to do this, right, similarly in your stories, and we talk a lot about that when we work together. Well, I'm appealing to an investor and I'm appealing to this, and we try to align our audiences when we can. But with our clients, when they're doing an earnings report or something investor related, it's like, what are the key things that this audience needs to know, and why should they care about it now? And I think that's where we have a lot of synergies of trying to figure out. You have to make things simple. I mean, you just did a great job in explaining when you were just saying the transitory effect. I was going to ask you, could you explain that? You already did that as you continue talking, because you need to keep your audience with you as you're explaining things, and you also don't want to bore them with some of these mundane topics too. So keeping it, how is this relevant to you? How is this relevant to your wallet? How is this relevant to your portfolio, right?
Like I said, I came from People Magazine. I didn't come from CNBC or any type of other type of business news outlet. I didn't know a lot. So I had to learn a lot on my own. It meant a lot of reading, a lot of listening to podcasts, a lot of extra prep after work hours to really try and understand the content. So I think that actually has been an advantage to me now, because when I story, I try and think, okay, well, the me from 7 years ago, if they read this, would they understand what this means?
True.
And I always try and approach my stories, whether it be an on-air hit or whether it be a written piece, through that lens. Am I explaining this in a way that makes sense? Do I have the context in there to allow people that maybe didn't read my previous 3 stories and they're just catching me now? Do I have enough information in there to tell something as accurately as I possibly can without confusing the reader? And I think that's also a challenge, but something that I think all reporters, especially today when there's a lot of changing narratives all the time, that's what everyone really strives for.
I actually noticed that one of your stories recently on Netflix and how Netflix is winning and it was upgraded to a buy rating, you actually put in there, as a reminder, Netflix will no longer be revealing their subscription growth later this quarter. And I didn't know that, having read that. And then I was able to say, thank you for the reminder, click, go back. So I noticed that, and I wasn't really used to seeing that language like just so clearly as a reminder. I'm speaking to you, my reader, in case you weren't aware of this other. I thought that was really cool. That actually stood out to me when I was reading the article.
Yeah, and that's a huge change. I mean, Wall Street really looked at the subscriber number to figure out whether or not Netflix was at a healthy level, whether they're a great company. And now all of a sudden that's being taken away. So how do you view this company without knowing what their subscriber figures are? And Netflix did that strategically because they want people to focus on the revenue side of the business. Now that they've introduced advertising, how will that help revenue growth? Now that they're really sort of winding down the password sharing that we've seen over the past few years, that crackdown, how is that going to impact revenue? So Netflix did this for a reason. And now it's up to the investors in the Wall Street community to figure out, okay, well, then how can we really use that information and the new metrics that we're getting, or the existing metrics that we're getting, to determine the health of this business when we don't have the subscriber figure? So Disney as well, that's another company that recently underwent a major change, rejiggering how they report. And for actually quite a while, I did a whole little thing as a reminder. Disney reorganized and restructured the companies into 3 separate businesses. It's not the same that it was a year or two ago. And I think that's really important to have that context in there because, like I said, things change just so quickly in this industry.
Yeah, your audience, particularly the investor, both Main Street and Wall Street, need to know their metrics of how they're going to evaluate these companies and all the parameters. And also with Netflix, I think it was maybe 2022, they started the subscriber metrics because they were down on revenue. So it was a nice way to show
like we're a growth company, right?
Yeah. So everybody, and knowing that from a comms perspective, like, well, what's our story? And I think of story. I don't like to talk about spin because I don't believe in spin, because spin can gives the intention, the idea that you're not being truthful. I think you need to be authentic and truthful and accurate. It's just, where are you focusing? People need to know how to evaluate your company. Well, obviously, being down in revenue is not an ideal metric. So where's the bright spot that we can say, well, while we're reinvesting and while we're repositioning, we are showing high subscribers, and now we've actually are back on track, and we can highlight that we're a pure play company, we're a first advantage mover, and we have all this data on our subscribers, so we're going to be able to produce better content and be competitive. So it's very interesting, and I think the fact that you are so, I know from experience, so attuned to all those details helps you make those stories more impactful for your audience.
Yeah, Netflix has been at this for a long time. You mentioned their first mover advantage. The fact that Netflix is doing this, you're not seeing a lot of the other companies that are not profitable say, oh yeah, we're not going to tell you our subscriber figures, because they have a different, they're on a different track right now. They have a different story to tell. And that's because they got into the game a little bit later than Netflix, and they're still sort of working to ramp up that profitability. And in the meantime, we also want to show that we're adding these subscribers and that people are sticking around for our content. So just because it's the same industry doesn't mean that each company operates necessarily by the same rules. These are still different companies at the end of the day within the same business, within the same ecosystem, but they're all have different types of business models. Netflix is a pure play streamer. Disney is very different. It's not a pure play streamer. You have the parks business too. So it is evaluated differently than a Netflix. So it's been very interesting to sort of kind of parse through all of these different companies that are all within my coverage area, but are just so different fundamentally.
Yeah, and then we have YouTube, which I personally have been
Mhm.
using since probably 2013, 2014, just chugging along with a YouTube TV subscription. And now it's like everyone's realizing that YouTube has been here all along, and YouTube is gaining more market share and attention. What are your thoughts on YouTube?
I think YouTube is probably the biggest competitor for all of these streaming platforms. I mean, again, like we've talked about, they're different in the sense they're owned by Alphabet. They're obviously within that big tech ecosystem, but people are spending more time on their couches watching YouTube TV on their television screens. A lot of that has to do with sports. The acquisition of Sunday Ticket, I think, was really
Right.
smart by YouTube. Also, YouTube, they're owned by big tech. They have a lot of money and they
Right.
can spend a lot of money. And when you talk about sports rights being the last frontier of the streaming wars, they have the deep pockets to really lean into that and to purchase those rights. Whereas some of these other companies, it doesn't make sense. They can't justify the high cost. So that's an advantage for YouTube. More people are watching just kind of the regular old YouTube content on their screens. You think about Parents and Miss Rachel, things like that. They will go on their television, they'll turn that on, kind of leave the baby in the living room. And that's different from what we've seen over the past, few years where YouTube was primarily watched on your phone or on your computer. Now we continue to see these updates from the leadership side at YouTube that they're continuing to be a big presence on screens. And you have third-party data sources like Nielsen proving that as well. So
Yeah.
YouTube TV, you definitely cannot ignore that side of the streaming wars. And it's, even though it's not necessarily the content that you're used to seeing on a Netflix, they are also partnering with a lot of creators and they are doing a lot more scripted stuff. And it
That will
seems like
be
the creators,
interesting.
yeah, it'll be interesting, right? I went to a panel recently about how creators sort of, they want to be recognized by Hollywood in general. If you produce a movie for YouTube, should that be up for an Emmy? Should that be up for an Oscar? And that's a bigger conversation that's happening right now in Hollywood. I think for a while we saw this sort of hesitation to allow streaming into the fold,
Right.
but more recently that narrative has shifted. Now it seems like, well, you kind of have to. And I think the next wave will be looking at YouTube in that way as
Yeah.
well.
It's interesting. And we both, I pretty much grew up on YouTube. I remember
Mhm.
having a flashback. You were in your high school and I was in my college doing the PR for the TV station there. And one of my first things was saying their issue was people weren't really watching the campus TV as much. And so we did a lot of things where students were. But one of the things was everyone was on YouTube and they weren't putting
Yeah.
any of their content on YouTube. They were just putting it on campus TV. And so that was probably 2006 or 5 or 6. So it's just YouTube has been here for so long. It almost feels like Wall Street forgot about them. And probably you and I have been still YouTubing it, this whole time. But it's a fascinating story.
Yeah, it's also really easy to upload a video to YouTube and generate
Super
content than
easy.
it's ever been before. And then you think about the TikTok and social media and everything
Yeah.
else that's sort of exploded. There's just a ton of content out there. So there's a lot of competition for people's attention, a lot of competition for those eyeballs. And we have a lot of different streaming services out there. So I think looking at all of that in combination, that means that we're going to continue to see consolidation in the
Right.
future. And really, it's going to be the strongest will survive and everyone else will either die out or be brought in by another bigger competitor. So that's sort of the future that I'm looking for as well.
Yeah, that's very interesting. And a lot there with TikTok in the news as well on that front. So that will be interesting. Going into other coverage areas, you've spent a lot of time on overall business, the economy, the
Yeah.
stock market. The other day you wrote about the Fed meeting yesterday. I peeked into those comments. I thought those were really
Yeah.
super interesting. Tell us about what's going on with the Fed. And I am curious if you ever peek into your comments and your thoughts on what you see there.
I love reading the comments. I know everyone says, don't read the comments. Why do you do that? I love reading it because sometimes I do find it interesting to see what people gravitate towards, what they're saying. You do have your trolls, and I do get some emails sometimes where you're like, what are you going to do? But I do like seeing what our users are saying. And you can always tell a story is like hitting the right pulse when you go and you all of a sudden have 2,000 comments on something.
Yeah.
Like I always think it's really interesting to see the stories that resonate versus the stories that maybe, don't as much. And you can usually tell that by just looking at the number of comments and the conversation that's happening there. Right now,
The comments weren't like the way you see on Instagram or people that are really mean. The comments were, you wrote a story, you educated them, and they're sharing their thoughts about the economy, their concerns, their perceptions. I thought it was fascinating.
Yeah, and people do have a lot of like hardcore thoughts right now, as they should, right? I mean, we're operating in this very uncertain time, and I think the Fed meeting really emphasized that uncertainty. To me, was the word of the day. And what was interesting about this meeting in particular is that they release these quarterly forecasts as part of their summary of economic projections. It only happens 4 times a year, once a quarter, and it's always closely scrutinized to see, okay, what is the Fed thinking when it comes to the longer term outlook for interest rates, for inflation, for GDP, for unemployment? And for 2025, those estimates were revised. We saw inflation move to the upside, GDP growth move to the downside, unemployment rate tick up slightly. So that suggests this more stagflationary environment where, inflation levels are going to persist. Perhaps we see slower growth, and Wall Street has been very concerned about this. So that's why you've seen this recent sell-off in the market. Because if you have stagflation, that means the economy is going to unravel. That means it's not great for corporate profits, and it's going to be really hard for the Fed to cut interest rates if inflation remains sticky. Or if they do cut interest rates, it might be because the economy is rapidly deteriorating and they need to kind of save things where they're at right now. But what was interesting is that if you look over the long term, by the time we get into 2027 and beyond, the forecast aligned by what we saw in December. So nothing really changed that much. Now, Powell did say that a lot of that was, because their base case is that inflation will be transitory, like we talked about. But he also said, look, I mean, at a certain point, it's inertia because we don't know. We don't know how things are going to play out. We don't know which policies Trump is going to lean into more. Tariffs are still a big TBD factor. And until we know, we're just going to kind of like stay where we are. So even though that was a positive on the surface, I think if you really think about it, that could change very, very quickly. So there's still a level of uncertainty. Markets do not like uncertainty. They like to know things. And right now, we're in this wait and see mode, and you have to sort of practice patience. But what Jerome Powell was saying is you have to look at the hard data. And the hard data, those are things like the unemployment rate, retail sales, GDP. The soft data, that's a lot of the survey work. So consumer sentiment, consumer confidence. The soft survey data has come in really, really bad. And that spooked Wall Street because they're thinking, all right, folks think inflation's going to go up. They think they're going to lose their jobs. But Powell has said, let's take a step back. Unemployment rate is still at multi-decade lows. We still have solid GDP. Inflation is coming down towards our target. That's what we're focused on. And all the sentiment data and what people are thinking, they're probably thinking that because of all the various panic headlines that we've gotten over the past few weeks. But that's not a good indicator when it comes to future consumption. Whether or not that turns out to be true remains to be seen. But my biggest takeaway from all this is that we just don't know. We only have the information that we have, and it's going to take a few more months of data and a few more months of really hearing from the Trump administration and where we're at with this economy to really figure out where we're heading.
And what do you think about what CEOs can be doing? Because on our end, what we've been really talking about a lot lately is to quell nerves. It's actually really important amid all this uncertainty that the CEOs are consistent. They cannot be silent. They might not know everything going on with their company, but if they can at least address what they know and not know, communicating and showing up and being consistent with all this inconsistency. What are your thoughts on that?
I think exactly what you said. Be truthful. If you are cautious and you're going to lower your guidance, say that. Like, this is a cautious we're doing this to prepare our investors, and you might get some short-term pain there. I've seen a lot of companies lower guidance recently, and stock sells off because no one wants to see that. But then if you look ahead to the future and your guidance actually comes in better than expected, the stock will go up. So really just sort of not trying to placate to your stock price or to what Wall Street might do or think, because that's a game of catch up that I don't think anyone's ever able to fully win. Just sort of being true and authentic to your business model, your forecast. If you're preparing for the worst, tell people that. I think that makes sense. There's a lot of companies that are, stockpiling and trying to increase inventories just in case the tariff wars escalate and prices go up. If you can prepare now for the worst and you're communicating that to Wall Street, I don't think that's ever a bad thing, because then when things do go bad, you're in a position of strength. And if things don't go as bad, then you can just come out and say, we prepared for this and now we're in a better position than we thought we would be. So I think as a CEO, just kind of to have that consistent communication, that consistent message, and being as honest as possible is helpful to your company at large, your share price at large, because again, markets like the certainty, and even though it's uncertain times, you can be certain in your strategy. And I think that's important.
Yeah, that's a good point. And you also need to have the confidence and trust of the investor. So if you're not saying anything, or you're misleading or omitting information, that's really worse than just telling what your strategy is, whether we're preparing for the worst, hoping for the best, we're super up, whatever it is. Because that trust, once that trust is broken, it is so hard to come back from that, more so than what you're saying of lowering your guidance and surprise and delighting and beating it later. You can make a huge comeback there. You break the trust and it's so hard to rebuild.
Yeah, and we always ask company CEOs when they're on our shows and their stock isn't doing so hot, what's Wall Street missing? Are you concerned? And 9 times out of 10, every CEO will be like, we don't follow the daily stock price. Now I know they probably do, and it's something that they look and they watch for, but they'll bring it back to their strategy. Like this drop is not indicative of our business, and here's why. So I think just having that in your back pocket, having the why to back it up, I think is always great and important, and a reassurance to those long-term investors that you do have the confidence in your business. They're invested for a reason. Just always trying to remember why is the investor invested in my company in particular, and how can I communicate to them that their investment is safe for XYZ reason, even if we have some turbulent times ahead.
Yeah, we're not making it up as we go. We actually know what we're doing. Yeah. We're navigating the situation. We're being nimble and doing what we need to do based on all of our experience. That makes a lot of sense. Now, when it comes to these patterns of, stop-start tariffs and rolling back different things, and the uncertainty that has been really generated over these past 3 months just from all the headlines, right? Do you see any patterns from Trump's first administration, or is this really more of the same there? Is this something that is to be expected, or is this something that you think is different than what we saw in the last administration?
I think it's very different. In the last administration, they were very focused on the stock market, and they said they really used the stock market to kind of tell how popular the administration was at the time. Right. This time around, you're hearing a different message. All of Trump's officials, including the president, has said, we don't really care about what the stock is doing right now. This is short-term pain for longer-term gain. And that surprised Wall Street, because I think they were hoping that what we saw in the past would repeat, not only when it comes to his love of the stock market, but also with tariffs. That's also been very different. So that has led to, I think, a lot of the volatility that we've seen, because heading into the inauguration, I think people sort of had an idea of what we could expect. Like, oh, we've been here before. We know what's going to happen. Right. These are the trades that worked before. They're going to work again. And we have sort of seen this new era of the Trump admin. Trump 2.0 is very different than Trump 1.0. Mm-hmm. So that's led to a lot of those concerns. And again, just going back to the markets like certainty, they thought they were pretty certain they knew what they were getting. And now it's sort of proving that these are actually more uncertain times than we think, and we can't really look back in the past. We sort of have to just continue to move forward with the information that we have and see what plays out from there.
And what about on the regulatory side? Because that was meant to be a bright spot for this administration as well.
We haven't heard too much about the regulatory side, like deregulation. That was supposed to be a big boon for M&A, supposed to be a big boon for the financial sector. But Trump has been very focused on tariffs.
Right.
Now, I do think tax cuts, deregulation, that's going to come eventually, but it's going to come later. And I think heading into the year, there were some investors who thought we were going to see that sooner, or at least that Trump will communicate that sooner. But he's sort of been all in on tariffs and trade right away, fast and furious, not really talking about anything else. So that's been the focus of this administration, and that's kind of creating a lot of this volatility. I do think a lot of the deregulation, tax cuts, other things that Trump promised on the campaign trail will be coming, but it's not coming right now. And right now, that's the biggest concern.
And how is that impacting what you're hearing about pipeline for deal flow? Because I know last year, particularly May, June, it was a bit of a frenzy on the M&A front in media and entertainment in particular. And then obviously we have some IPOs. We've had some decent news with Klarna and Discord and Hinge Health, like filings. Are you hearing anything that, like, in absence of discussion from Trump, are these deals on the back burner, or might they still have hope to continue Q2, Q3?
Well, the hope was that interest rates were going to come down. And that's been a big reason why we haven't seen a lot of deal activity. It is very expensive to borrow capital at this point in time. The interest rates, they've remained very restrictive. Now that we're in an environment where interest rates might remain higher for longer, that could be a detriment to future deal making. Now, I will say we've seen sort of this frozen IPO market for a little bit, but you mentioned companies like Klarna coming out. Maybe there's an IPO thaw on the horizon, which I do think there will be more deals, especially because there's a lot of capital on the sidelines, a lot of dry powder that people are ready to deploy at this point. We've been waiting for a long time. But I do think right now, there's a lot of uncertainty with tariffs. We see a lot of craziness in the stock market. Interest rates are high. People are going to wait for a little bit,
Might
at
be
least
pushed out a little.
Heading into the second quarter. I think it's going to get pushed out into the back half of the year, possibly 2026. But it's all going to depend what we see from the Fed and what we see from this administration. But with those unknowns lurking in the background, I think everything right now is on pause.
Yeah. So how do you, as an on-air correspondent, writer, producer, how do you manage all of this, even just for your own time management, your own stress management? I mean, this has just been absolutely wild, right? It's giving 2008 vibes, but different story, but 2008 vibes of just the headlines and the uncertainty, and the new normal was a big concept then. How do you manage everything that you're managing all of this generally? And I'll get into some nitty gritty.
Yeah, I think just like taking things one step at a time and focusing on one thing at a time, whether it be, okay, I'm writing this story, I'm just going to focus on the story, or I have a hit in 30 minutes on this piece, I'm just going to, take the time to focus on this piece. So sort of having this checklist in my head and focusing on one thing at a time. I also really have been loving catching up on my reading at night as opposed to throughout the course of the day, because I feel like you wake up in the morning and it's this fire hose and this fire drill of, okay, we need to get everything in right away. And when I'm in my bed at night, I like to read through the analyst notes. What are people talking about? If I can formulate some sort of headline or story idea from that the night before, I find that's really helpful in the morning when I talk to my editors and say, okay, this is what I'm thinking. This is the angle. What do you think? And they'll weigh in. But for the most part, I write. Everything I write is something that I've pitched. I don't really get a ton of assignments. It's all really my own story generation and ideas. And a lot of it is from what I hear people talking about, even with my friends. If there's a story, a business story that my friends are sort of weighing in on, that's how the light bulb goes off. Like, okay, this is something that a lot of folks are talking about today. But then also on the Wall Street side, I get a lot of research notes. Like, what are
Right.
analysts saying? Is there a thread line that I could pull and sort of write this story that maybe hasn't been out there at this point? Obviously, after the Fed yesterday, there was a lot of ideas and a lot of angles that have been in my head that I will be pursuing over the next few days. So, just sort of kind of taking things one step at a time and really honing in on what is the biggest story of the day? How am I covering it? And if it's covered already, what is that day 2, day 3 story that I can work on now that I can present, and people can maybe glean something else or have a new insight from what just occurred?
I think that's so important. You don't want to just be duplicating what everybody already said. And there's like this chase of the headlines that we see. Even our clients are thinking they need to chase the headlines. We're reminding our clients, you're not breaking news reporters. It's okay. We don't need to react to everything, right? We need to think of the context and the implications in the next couple days. And so I think it's really interesting to hear you say that also as a reporter, that like, let's say the AP writes something because they've got the wire hit. How are you really supposed to beat that, right? Like they already got it, it's already out. So speed's not going to be a factor, but coming up with something new and fresh and that thread line, that could be a standout that people, as they're reflecting and processing this news, need to understand.
Context as well, right? The AP might publish something very quick, rough and dirty to get the headline out there, but maybe it's missing a lot of the context.
Right.
So I still think you can write things that have already been out there, but you're writing it in a different way that's providing additional context or additional feedback, whether it be an analyst quote or whether it be sort of a more background that will help readers understand this more. I think there's a value in that as well. So yeah, we try Yahoo Finance not to get too bogged down with all that. You want to be on the news, of course, and you want to be quick, but I don't think you also want to be accurate, and you want to be providing something that the reader can take away at the end of the piece, which sometimes if it's a quick headline, okay, that's a headline I know, but how did we get there and why is this important? I don't know. So that's something too and an exercise that we always like to try and experiment with as well.
And speaking of looking at patterns and all the people you've talked to, is there any one in particular, or any segment or story in particular that you look back and think, that was awesome, like that hit all my boxes of context, the news story, a really good get, anything that you're super proud of that you'll reflect on, could share?
I think for writing stories, I did a story last year. It was like 2,500 words, and it was basically Netflix has won the streaming wars. Here's how other players can catch up. And it had a lot of context, it had a lot of information, and I received compliments on it. And it was one of those stories that, okay, like I did it. Like I did that thing, and I am proud of it and excited about it. And then on the on-air side as well, I think, hosting on a day where a lot of the Mag 7 players are releasing earnings, and sort of being able to talk freely about the different types of companies and how they sort of operate under different guidelines, but also the same guidelines. That's always a really proud moment for me. And last year, I booked and interviewed Kevin Mayer, who is former CEO of TikTok. He's now a strategist for Disney. He owns Candle Media, and he was someone that I've been wanting to talk to for a really long time. And it was part of our Yahoo Finance Invest conference. So I was able to book him. I wrote up the questions, and it generated news. So if I can do something that generates news, whether it be through my writing or through my interview process, that's always a good, like, okay, I like, people are listening. They're what I said resonated or made some sort of an impact. So I'm always proud of those moments as well. Whenever I see a competitor just say, like, as reported by Yahoo Finance, or give a little link somewhere.
Absolutely.
That's always a nice, stamp of approval.
Yeah, no, that's amazing. And a couple other things, just, thinking about where you are now, you're at home and in studio these days, right? You're doing a mix of both.
Mostly in studio. due to, our shows and coverage, but we do have flexibility to write from home, which sometimes if you're bogged down and you have a lot of calls to make, or you're writing a really long piece and you just need that time, it's always nice to have that time to write from home. But I try and be in the office as much as possible. I love to be available in the studio. I prefer in studio hits than, Zoom in my
Yeah.
apartment. As much as I love my apartment, I always feel like it just comes off better if you're in studio, if you're in person, the vibe is just there. And
Yeah.
also, I just really like collaborating with my coworkers and my colleagues. And
Yeah.
even though we do a lot of work on our own, just even talking a story through for 5 minutes can help me in a lot of ways. So I always try and look at that as well when I think about, should I go in the office today? Do I need to? If I'm not on the show, it's like maybe I work from home. I usually try and push myself to go in because I feel like I get something out of going into a workplace.
Yeah, the energy there is amazing. And I mean, for you to have to be on camera almost every single day, I think that's a lot.
Yes.
Is there anything on your personal side that you do to help you really stay centered? I mean, you talked about at work, one step at a time, which I think is a very valuable focus and applies in personal. Is there anything you do so that you can, be your best? Because you really have to be at the top of your game to be on camera on a very regular basis and sometimes at a moment's notice.
Yeah, I try and maintain somewhat of a routine. Sometimes it goes off the rails a lot, but I try and keep I'm a very clean, organized person. I don't like my apartment to be a mess or my room to be a mess. I like to make my bed every morning. I like to come home and everything looks nice. The trash is out, my laundry's done, things like that. Really helps center me. I try and do yoga like 3 to 4 times a week if I can. I really like core power yoga sculpt, get some weights in there. I think that's always a good release, and trying to get more on a consistent schedule with that as well. But I think just like having a routine. And then I love like going out with my girlfriends too, and like going out to dinner, getting a drink. I'm a big work hard, play hard. Like you can have a crazy, crazy week, but you also need to have an outlet where, you're having fun, you're laughing. I love to travel. I love going to Florida. I like going to the beach. I just came back from a ski trip. Like just finding those moments for you outside of the daily grind of work, I think is also incredibly important to just kind of maintain your mental peace with all the craziness and busyness of things. And then when you come back, you're even more refreshed to hit the ground running.
Yep, absolutely. Well, this has been a great conversation. Is there anything that we didn't ask you that you wanted to be sure to share?
No, I think kind of going back to as CEOs or leaders or anyone that is looking to get a quote or get on air, just going back to being your authentic self. I think it's obvious if you are faking it or you come off inauthentic, being prepared with your talking points, and coming on camera or hopping on the phone with a point of view, with a perspective that you're confident in, that isn't fake, that you're not unsure of. Like you need to have that confidence within yourself always. And I think that's for any person in any type of work. You need to just know that you can walk into the room and you deserve to be there. I think imposter syndrome is alive and well for a lot of people, and I'm sure there are executives and CEOs that have imposter syndrome too. I would hope at least, but you can't let that deter you from kind of going in there, making a splash, and that's kind of where you get the money quotes, and that's where you get the people where you watch them on TV and you say, wow, they know what they're talking about. I trust them. You have to have that inner confidence and that authenticity to really connect with the reader, the viewer, whoever you're trying to speak to. So yeah, I would just that's my, piece of advice.
That's great. No, authenticity is something we always are preaching. And I think it's that connection, like you and I having this connection because we've worked together, but we also, have been prepared. We're prepared for our business interactions. And then we also are able to talk as human beings of what life's like or what we're dealing with
100%.
too.
Everyone is human, even, the high-powered politicians and the executives at our core, we're all human. And that is why I love being a reporter, is just getting that human story and finding the human connection that can shine through a written piece an article, an interview, those types of things. That is the basis of everything that we do. So just remembering that we're all human and we're all just trying to learn and be better people at the end of the day.
Absolutely. We love it. Well, thank you, Allie, for joining us. This was an amazing segment. I
Thank
think there's a
you.
lot that you offered, so thank you so much.
Thanks so much. Hope to be back soon. Bye.
Absolutely.